Hi everyone, welcome to the session. In this session, I'll be discussing about one of the question raised by one of my viewers. Okay, so let's go through the question, then we'll move on to the solution. So we'll read the question. Complete the table below for each item A to G, indicating with a tick. Okay, whether the item would normally appear in the debit or credit column of the trial balance. Okay, so whether these items from A to G, you are given a list of items, whether that will appear in the debit side or credit side of the trial balance. That is the first part. The second one, in which financial statement the item would appear at the end of the accounting period. Okay, in which financial statements. So as we all know, we prepare two sets of financial statements. Okay, the financial statements consist of statement of profit or loss and statement of financial position. Okay, so we need to identify whether these items would appear at the end of the accounting period and whether as a debit balance or a credit in the extended trial balance. Okay, so this kind of presentation is known as extended trial balance. Okay, now before I move on to the solution, let me briefly explain you about the basic accounting equation. Okay, so let me explain you about the basic accounting equation. Okay, so if you take the basic accounting equation, so basic accounting equation. Okay, so basic accounting equation is assets equals equity plus liabilities, right? Okay, now usually assets will be a debit balance. Usually assets will be a debit balance, then equity will be a credit balance and the liability also credit balance. Okay, if you expand this equation further, assets equals equity plus profits. Okay, plus liabilities. Okay, now I added profits. Okay, so during the period, if the business earns a profit, that belongs to the owner. So therefore, you need to add. Okay, still the account balances will be, assets will be debit, and this side, the equity, profit, and liabilities will be a credit balance. Now, if you further expand this, assets equals equity plus, instead of profit, I'll say within bracket, sales minus expenses. Okay, plus liability. Okay, now what I will do is, since there's a minus sign, I want to make this all pluses. Okay, so I will move this minus sign to the other side. Okay, the left side. So therefore, assets, when you move minus expenses to the other side, it will be plus expenses equals equity plus, now what is remaining? Sales. Since we have moved expenses to the other side, we don't have that, plus remaining is liabilities. Okay, so what will be the account balances? Will it be debit or credit? Yes, assets will be a debit balance, and also expenses will be a debit balance. And equity, it's a credit, sales also credit, liabilities also a credit balance. Okay, so if you know this basic accounting equation and how it is presented, okay, so it's very easy to answer these type of questions. Okay, so basically all the assets should be on the debit side, expenses should be on the debit side, equity should be on the credit, sales should be on the credit side, liability should be on the credit side. Now what we do is, if you take the expenses and sales and we put it under statement of profit or loss. Okay, we take expenses, debit balances, and sales credit balance. We put it under statement of profit and loss. And the remaining assets, equity, and liabilities. So we put it under statement of financial position. Okay, all assets, equity, and liability should be presented in the statement of financial position. Okay, so our profits should be expenses, sales minus expenses should be under statement of profit or loss. Okay, so based on this, let's move on to the question. Okay, now if you take the sales, okay, sales, as I told you, it's a credit balance. So therefore it should be on the credit side. Okay, then this is part of the statement of profit or loss. Okay, so therefore it has to be on the credit side of the statement of profit or loss. Then the opening inventory, it's a debit balance. It's a debit balance, and also it should be presented in the statement of profit or loss as an opening inventory. It's a debit balance. Okay, usually the closing inventory, I'll make a separate video for this, okay, to explain how it operates, opening inventory and closing inventory. Okay, so opening inventory will reflect in the statement of profit or loss account, and the closing inventory will be shown under statement of financial position and as well as statement of profit or loss. So this I will explain you later on. For the time being, just remember the opening balance, opening inventory should be on the debit side of the trial balance, and it should be in the statement of profit or loss. Okay, then purchasers ledger control account. So purchasers ledger control account means it's your creditors. So creditors means your liabilities. Okay, so liabilities usually on the credit side, and that will be in the statement of financial position. Then rent paid, it's an expense. So therefore, as I told you earlier, expense should be a debit balance, and expenses should be reflected in the statement of profit or loss. Okay, and that will not be reflected in the financial position. Then discount allowed. So discount allowed is an expense. Okay, for example, let's say you have a receivable balance. You have a receivable from a customer. Okay. So receivable from a customer, let's say A. So the receivable balance is 100. Let's say of this 100, he paid 90. Okay. So what you will do, you will credit here, let's say bank, you will debit the bank account and you credit the receivable account. And the remaining is considered as, let's say, discount allowed. We are allowing the customer a discount of 10, so that the balance will be 0 now. Receivable balance will be 0. So this discount allowed is a loss to the company. So therefore, what you do is you debit the discount allowed account 10 receivable from A, and receivable from A account will be credited discount allowed. Okay, so therefore it's a debit balance, it's a loss, or we can treat it as an expense. So therefore it's an expense. It should be on the debit side of the trial balance. And since it's an expense, so it should go to the statement of profit or loss account. Then office equipment is an asset, right? Asset should be on the debit side. Then that will be reflected in the statement of financial position, because assets, equities, and liabilities should be in the financial position. Drawings. So drawings is a reduction of capital. Okay, increase in capital. Okay, usually equity is a credit balance. Okay, so a reduction in equity will be a debit balance. We record it in a separate account called drawings account. Okay, so therefore it will be reflected on the debit side of the trial balance. And since it is an adjustment to the equity, it has to be in the financial position. Okay, so this is the answer for the first part. Okay, so let's quickly move on to the second question. The following trial balance has been extracted by Sam Avalos at 31st March 2008. Okay. Now what is required is you are to prepare the extended trial balance of Sam for the year ended 31st March 2008. Let's say 2008. Okay, so now you are given set of account balances in the trial balance. Okay, so you have to show how these balances will be reflected in the statement of profit or loss account and statement of financial position. Okay, so let's go through one by one. Opening inventory. Okay, see, opening inventory, let me take. Okay, so opening inventory, as I told you, this should be a debit balance. It should be reflected in the statement of profit or loss. So 10,475. Okay, then this will not be reflected in the statement of profit or financial position. Next one, purchases. It's an expense. Expenses will be a debit balance and it will be reflected in the statement of profit or loss. Okay, so therefore 83,691. Okay, so that will be the amount to be shown in the statement of profit or loss. So this one, I'll say 83,691, and this one 10,475. I'll remove this. Okay. Okay. Yes. Now let's move on to the other one. Sales revenue. Okay. Sales revenue is a credit balance. Okay. So sales will be reflected in the statement of profit or loss to calculate the profit. So therefore, it will be reflected in the statement of profit or loss. And then if you take rent and rates, rent and rates, heating and lighting, wages and salaries, vehicle expenses, advertising. Okay, so all these are expenses. Okay, so expenses should be a debit balance. It's a debit balance, and it should be reflected in the statement of profit or loss to calculate the profit. Okay, so let's include these balances here. Basically, it's not aligned. It's okay. I'll just put it here. 10,083, then 3624, 35,822, 4,046. Then you have 4,046. Sorry, 3,984. Okay, they should be aligned. Try to align this. Okay. Now, okay. Then you have premises at cost. Now, premises at cost. Okay. Now, the premises at cost. This is an asset. Okay. So since it's an asset, it should be reflected in the statement of financial position as a debit balance. It's 100,000. Then office equipment at cost. So that is also an asset. It should be reflected in the statement of financial position. Then you have vehicle at cost, again 35,000 on the debit side of the statement of financial position. Then you have sales ledger control account. Okay, so which is the trade receivables. So trade receivable means your current assets. Okay, so it should be reflected in the statement of financial position. So it should be 19,247. Then you have bank. So bank is an asset. It should be reflected in the statement of financial position. Then you have cash, again, statement of financial position. Then you have capital. It's a credit balance. So therefore, in the statement of financial position. Then drawings is a reduction in capital. So therefore, we just debit this account. Okay, in the financial position, we just show it as a debit balance in the equity account. Okay. Then you have a loan from bank, which is 65,500. It's a liability. It's on the credit side of the statement of financial position. You have purchasers ledger control account. It's a trade payable. Okay, it's a creditors. It's a liability. So then value added tax. It's a credit balance. It's a payable. It's a payable amount. So therefore, it's a credit balance. It's a liability. Then you have this closing inventory, statement of profit or loss. Okay, and a statement of financial position. So usually this inventory, the closing inventory, we have to value the closing inventory, and we need to pass a journal entry. So journal entry will be, so basically this closing inventory, okay, the journal entry will be the closing inventory debit. This goes to the asset side, and closing inventory credit, this goes to the statement of financial statement of profit or loss. This goes to the statement of financial position as an asset. Closing inventory, statement of profit or loss. So the closing inventory has to be deducted to calculate the profit. Okay, so therefore it has to be a credit balance in the statement of profit or loss. Therefore it will be a credit balance. Then closing inventory statement of financial position, since it's an asset, it will be reflected as a debit balance in the statement of financial position. Okay, now if you take this, okay, now as you can see, your financial position should balance, right? Debit should equal to credit. Now when you see this, the difference between the credit side and the debit side. Credit side is more, right, than the debit side. So credit side is 170,000, 173,03, and our debit side is 151,725. So therefore, we have a net profit of 18,578. So this net profit belongs to the owner of the company, Sam. So therefore, the profit will have a credit balance. It's a credit balance. So that will be added to the profit, to the equity, okay, as net profit. So once you credit that, so here you have to say net profit. Okay, so net profit should be 18,578. So once you credit that, okay, so your statement of financial position should balance. So as you can see, your debit balance is 211,339 and credit side is 211,339. Okay, so this is how you prepare your extended trial balance based on the initial trial balance. Okay, so thank you very much.